Good afternoon. I'd like to call to order this meeting of the Jefferson County District Number 1. The Board of Commissioners meeting for today on Tuesday, May 16th, 2023. It is 3 p.m. I'd like to determine first that we have a quorum. I am Collins, Commissioner for District 2 and Chair of the Board.
Jeff Randall, Commissioner for District 1. Get my words right.
Dan Tupper, Commissioner for District 3.
Dan, where are you today?
I'm in Anchorage for the NWPPA Annual Conference.
Thought so. Jefferson County is offering both virtual online meetings as well as in-person meetings unless advance notice is provided. In-person attendance will be limited to provide sufficient space and masking is encouraged. Online participant audio will be muted upon entry. Please unmute at the appropriate time to speak. If you're calling in, use *6 to mute and unmute and *9 to indicate your desire to speak. The next item on our agenda, item number 2, is approval of the agenda itself. Are there any changes, alterations to the agenda?
I'll make the motion to accept the agenda as presented.
I'll second the motion.
Further discussion on the motion to approve the agenda? Hearing none, all in favor of approval of the agenda, please signify by saying aye.
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 Aye. The agenda is approved. The next item on our agenda, and this is a revised agenda, is public comment. And I'll read the prequel to public comment. This period allows members of the public to comment limited to 3 minutes each on any items not specifically listed on the agenda or for items listed on the consent agenda. Prior to any public comment, members of the public must first be recognized by the chair and are not permitted to disturb, disrupt, or otherwise impede the orderly conduct and fair progress of the commission's meeting. After an initial warning by the chair, individuals who intentionally violate these guidelines through actual disruption of the commission meeting will be dropped from the meeting. That having been said, are there any members of the public who would now like to take this opportunity to express themselves? Chair recognizes Mr. Tom Tiersch.
Thank you. Thank you for recognizing me. Good afternoon, all. I have a comment. Something caught my attention at your last meeting that was raised by your counsel, Mr. Paisner. And I said to myself, that can't be right. What he said, and I'll read quoting from the transcript, he said, quote, "We have an obligation to publish our agenda 24 hours in advance, and generally, unless it's an emergency, we really can't add anything to the agenda within 24 hours. But other than that, you have a lot of flexibility about how you set your meetings up, and the law is designed that way." Well, that's kind of true, but you can actually change your agenda anytime you want to, and it doesn't even have to be a regular meeting. Even special meetings, the agenda can be changed. The only restraint is on special meetings. You can't take final action on something that you've added to the agenda. That is to say, you can't vote on it. But other than that, the Open Public Meetings Act doesn't say that you can't alter your agendas. So just something to keep in mind. And I know you guys do it all the time for regular meetings. You add things, you shuffle the order around, and it's perfectly fine, perfectly legal, nothing wrong with it. I just wanted to clarify that point. So that's about it for the commentary on that. But I also wanted to say how much I appreciate the fact that this board is as open as it is. You guys have gone the extra mile in terms of making your meetings accessible. You've invested in pretty decent technology so that your sound is good, unlike a lot of meetings that I go to virtually where you can't really understand what people are saying because the room is terrible. You publish your stuff online, your agenda packets are complete, You even document the correspondence that you receive. Uh, You guys are doing a really good job, and I just want to let you know it's appreciated. So thank you.
Thank you very much. I appreciate the clarification on our flexibility and also your compliment. So nice to hear.
Yeah, appreciate that. Thanks, Tom.
Are there other members of the public who would like to comment? Hearing and seeing none, we'll now move on to the next item on our agenda, number 4, which is the audit exit interview. Mike, do you want to do an introduction?
Yes, if I could.
Hey, Mike,
Yes.
Commissioner Collins, can I jump in real quick?
Yes.
I guess I already have, but
Yeah.
before all the introductions and everything, I would like to thank Tyler. He came in, worked rather quickly to get us done. His group and Mike Bailey and his group seemed to click, and they got a lot of work done. We were able to meet our RUS deadline of March 31st. Everyone remembers, we thought we were going to have to apply for an extension to get our financials done. And because of all the hard work by Tyler and his group, Mike and his group, this presentation is ready tonight, and we did meet our March 31st RUS deadline. So I'd just like to thank everybody involved and let you know we do appreciate all you're doing. Thank you.
Yeah, so I was gonna say a lot of the same things. You know, we ran into a little crunch. We have Tyler Kennedy here from Bollinger, Gilbert. I did it the wrong way. BSGM. We were just talking about this before the meeting. BSGM. We're gonna go that way. Out of Lubbock, Texas. You know, we reached out to them at the last minute. They came in with very short notice, came and was able to complete our 22 audit. So we are very appreciative of what they're doing, what they did. We got a lot of the finance team. We got a few of them in the room here with us. Another one on the meeting remotely, just so they can hear. But Tyler's here to present the findings of the 22 financial audit to the board and give a little presentation. But yeah, I'd just like to also express my gratitude for them coming in and being able to help us out and help us meet our deadlines without the extension. So thank you, Tyler.
All right, I'm on.
Yes.
Okay, okay. Well, Kevin and Mike, those are kind words, and you know, kind of a strange turn of events for my December in 2023 moving forward to end up coming out here to Washington. But you know, at BSGM, we have one location, Lubbock, Texas, but we specialize in auditing utilities and electric utilities. So you know, when it comes down to RUS accounting and how y'all account for things, and especially in ISC using that software, I thought we were a good fit. And you know, the preparation time that we gave Mike to get ready for us to be here the 3rd week in January was short. And so I just, you know, it's a two-way street, and getting that done by the March deadline was certainly a big step for everybody. So thanks to y'all too. So, you know, a little introduction to me, you know, since I haven't been out here before, my name's Tyler Kennedy. I've been auditing for a little over 12 years, specifically in electric utilities. So I've been doing this for you know, a little bit of time now, and currently have about 13 electric cooperatives to my name that I audit, including 2 additional utility districts, Jefferson County Public Utility District being one, and then a public utility district in Texas. So a little bit different accounting, but really the same basis as it comes to financial reporting. So I think that fits. With that introduction of me, we'll get into the presentation for the 2022 results. If I could take over the screen.
Yeah, you should have access to share.
Okay. I will. Here, the audit report. So One of the most important things that we do is as an outside audit firm is deliver an opinion on financial statements. So with that being said, I'd like to cover the first thing you see from the auditor standpoint in the audit report, which is our opinion on the financial statements. This changed last year, and our opinion is now the first thing you read in our opinion letter. But between this and the internal control letter, these are the only things that we consider to own in these financial statements as your outside auditor, and they have our signature on them. So certainly important. And we, in our first two paragraphs, give you the opinion on the financial statements. So in the first paragraph under opinion, we tell you that we have audited the accompanying financial statements of Public Utility District Number 1 of Jefferson County, Washington, which comprise the statement of net position as of December 31, 2022, and the related statements of revenue, expenses, and changes in net position and cash flows for the year then ended, and the related notes to the financial statements, which collectively comprise the district's basic financial statements as listed in the table of contents. And then in the second paragraph, we give you our opinion, where we say, in our opinion, the accompanying financial statements referred to above present fairly in all material respects of financial position of Public Utility District Number 1 of Jefferson County, Washington, as of December 31, 2022, and the respective changes in financial position and cash flows for the year then ended in accordance with accounting principles generally accepted in the United States of America. So we give a clean opinion on the financial statements for the December 31, 2022 financial audit report. Along with that, I usually like to present our report on internal control, where we give negative assurance on internal controls, and I will scroll down to that and cover that for everyone, assuming there's no questions on the opinion letter. Did y'all have any questions on that? Okay, we'll go down and cover the internal control letter. So, there's two levels of auditing. Both are pretty much hand in hand. We have audit under generally accepted auditing standards, as well as an audit under government auditing standards. And along with the audit under government auditing standards, we do give you this letter, which would not be included in an audit that was not performed in accordance with government auditing standards. We call this the report on internal control and compliance. And it is way down. We'll get there. Okay. So, just some caveats. So under report on internal control over financial reporting, we say, as your outside auditor, in planning and performing our audit of the financial statements, we consider the district's internal control over financial reporting as a basis for designing audit procedures that are appropriate in the circumstances for the purpose of expressing our opinion on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of the district's internal control. Accordingly, we do not express an opinion on the effectiveness of the district's internal control. So, that paragraph is really letting you know we're hired to do a financial statement audit. Although we are, required to assess the risk of material misstatement in each audit area, we do have to gain an understanding of the internal controls related to the major audit areas. However, we don't design our audit procedures specifically for testing internal controls. And then we give you our opinion on internal controls or negative assurance in the third paragraph of that section, where we say our consideration of internal control was limited for the purpose described in the first paragraphs of this section and was not identified to identify all deficiencies in internal control that might be material weaknesses or significant deficiencies. Given these limitations, during our audit, we did not identify any deficiencies in internal control that we considered to be material weaknesses. However, such material weaknesses may exist that may not have been identified. So as far as this letter goes, that would be a clean opinion, or we don't have anything to report as a part of the audit report for the December 31, 2022 financial statements for items that would be classified as material weaknesses or significant deficiencies. So material weaknesses would be items that by themselves would result in a material misstatement of the financial statements if not found in a reasonable period of time. And the significant deficiencies would be a group of control deficiencies that would add up to where there would be material misstatements over that same period of time. So nothing to be reported that would qualify for those two definitions. Do y'all have any questions over that?
You use the term negative assurance?
Yes, sir.
That sounds sort of like a contradiction in terms.
Yes. So we don't give,
Positive criticism.
we don't give a clean opinion on internal controls. We give an opinion that we did not find any, we didn't find anything that needed to be reported to you all as a part of the audit that we do. We are required to report anything that would meet either of those definitions as a part of this letter. None such are included. So we were hanging out with lawyers in the accounting field today that they came up with that letter. Any other questions on that?
I have a question for Mike. Mike, could you talk a little bit about how, so this audit was done for the purpose of our RUS loan. They have a deadline for submitting this type of audit. Can you talk a little bit about the other audits that occur through the state of Washington and how they dovetail with this
Yeah.
process?
So we do an accountability audit through the state auditor's office, which that looks more at our policies, our procedures, the RCWs, to make sure that we are following those guidelines. So that's making sure that we're being accountable for government's money. And that's what that is. So it's a little bit different. This one looks at our books, our financials, make sure that we're reporting everything properly, accounting for everything that we should be accounting for. Where the accountability audit is, did we follow our policies or procedures on procuring stuff, recording stuff, or did we follow the proper, any RCWs that applied to anything? And then we also, actually Tyler's out here because we do have the single audits this year, or in 22, they're reviewing that right now to see whether it actually qualifies or not.
I'm sorry, what did you say?
A single audit,
A single audit.
that's for the government, for the grant monies that we're receiving, and also for FEMA. Anytime we get over $750,000 from the federal government, we have to have a single audit to make sure that we follow everything. And so that's actually why Tyler was out here yesterday and today. Was starting to look at that because we did have some grant expenditures that we seek reimbursement for in 2022. So there's still a little bit of question. They're clarifying some information with the state to see whether we actually need to file one for 2022 or if it's matching funds
Okay.
that the reimbursements are coming from.
So we may have some follow-up work for Tyler's firm.
Yep. Yeah. So yeah, we may have to get some stuff. He's been working with with Will and Karen in the broadband division. So last couple of days are getting some more information, some clarifying stuff from the state broadband office. So those are really our three audits that we have. We have the financial audit that we have to do every year, which is March 31st for the RUS Form 7, and also for USDA Rural Development 442, which is on the water side. We have a loan that we have to file stuff by March 31st. The accountability audit, that's kind of a hit and miss when the state does it. Sometimes they roll us over like they did this last time where they did 2 years at one time, but that's usually a year behind. And then going forward now, until we're done with everything, we'll have the single audits, which will be done at a little bit different time and a little bit more in depth on a few things. So, and then I know Dan, it looks like Dan's got his hand. Did that answer your question, Jeff?
It did. And I just wanted to tell Tyler, I met one of your principals at a NRECA conference back in DC, and really appreciate your willingness to help us out and the alignment of your skill set with our loan. That's great.
Well, we appreciate that, and I'll pass that along to Bill.
Thank you.
Okay.
Commissioner Cooper?
Yeah, so my question was for Mike, and I'll have Mike maybe put a little bit finer point on it. He probably somewhat answered the question already. So for me, it was, and this was going into the meeting, this wasn't something I just thought of. This was something that I was going to ask Mike. And that's on the financial totals that are in this audit, that Mike concurs with the findings, and do they harmonize with our numbers for 2022? Were there any discrepancies, as minor as they may be? Just a question to, for the record.
No. So I did review this report. I got a draft report before everything was finalized, and was able to go through and match everything up with what was in our system and everything. So no, I agree with everything that all the numbers that they had. Just a little bit of different reporting, how we report it and how they report it on the reports. So. Joel's got his hand up. And Dan. Dan took it.
Joel, did you have a question?
Yeah, I guess I just wanted to be clear that we're relying on the auditors here, not, Mike does a great job as finance director, but in the end, we rely on the auditors for their determination on the financial condition of the PUD.
Thank you.
Then you,
I don't have a question, but do you have any further information to present?
Yeah, certainly I do. Yes, sir.
Go for it.
So that was, that was kind of the lead-in discussion, certainly about our opinion on the financial statements and kind of the conditions of the records. So I was going to cover the financial statements as presented and go through those. And if y'all have any questions and pop up along the way, feel free to stop me and I'll assist as I can. So I have the presentation turned to a condensed balance sheet or listing of assets, liabilities, deferred inflows and outflows with the remainder as net position as of December 31, 2022 versus 2021 as presented in the management's discussion and analysis. And I think what this does is does a good job of giving you context for looking at the financial statements and was really going to be my basis for discussing financial health as a part of Jefferson County. And we can start with the assets. So total assets as of the measurement date, which was December 31, 2022, we're up to 130,942,000 versus the same measurement period of the prior year of 126,481,000 in the prior year. So we had an increase in our total assets year over year with increases in your current assets from 19,000,600 to 21,784,000. So in your current asset line items, we have your cash and equivalents, receivables, and materials. Those are going to be the main things. So you bill for utility services, you buy inventory until it goes out on the line, it's a current asset. And so all of those numbers would be including in that. And we had an increase of approximately 2 million year over year. It would be said that your cash and cash equivalents were down 4,800,000 from the prior year as you invested in fixed assets, buildings and certain projects that were going on out on the line during the year for additions of approximately 10 million, as well as debt service payments over the life of those specific debt issuances were also uses of cash during the year. And those are offset generally by billings to customers for those products and services. So a net decrease in cash and cash equivalents for the 2022 year, but increases in your receivables, which were up about 2.8 million year over year. And that really is stemming from, weather certainly drives a factor there, but y'all made a decision in 2021 to set into effect a series of rate increases to as a part of the electric service. And you can see that that's as of the measurement period having an impact on receivables as of that time, as well as significant increases in your inventory as you get the broadband fiber on hand and the cost of certain other things such as metering equipment and specifically transformers. As you buy those and keep those in inventory, that's going to inflate the value of those assets. And your non-current asset line items, you did see a decrease from 6 million to 4,734,000 in 2022. And what's really driving that is that your PERS 2 and 3 plans for your employees, you have a net pension asset there, which is kind of strange, where you have more assets available to pay for that plan than you have liabilities for those PERS 2 and 3. But as of the last measurement date, the market value of those assets set aside for that plan saw a little bit of a decline from the last valuation period, causing that net pension asset to dip a little bit for the 2022 financial statements. And then your capital assets line items were up, mainly due to line projects, as well as, this building here at Auto Street and the other, this building here at Four Corners Road and the other at Auto Street going into plant, and as well as other projects that are not as large. We did see an increased net of accumulated depreciation of approximately $4 million in your plant line items. And your deferred outflows of resources, the main thing that's going to be involved in that line item would be your electric plant acquisition adjustment. So when y'all bought the system in years past, you paid excess consideration for that system. And per our US accounting, that excess consideration is set up and amortized over the life of that plant. Total current liabilities were steady year over year, up approximately 400,000 to 11,881,000, with no specific changes in there. But as your revenues and your receivables increase. You did see increases in sales tax payables, or not sales tax, BDO taxes payable, related to those increased gross receipts, as that's how that's calculated. And your non-current liability section, we are down from 94,642,000 to 90,284,000 as you service that long-term debt that you had existing as of the prior year. During the year, there were no new long-term debt issuances. So it was just servicing the debt according to those amortization schedules relate to each one of those debt service obligations. And your deferred inflows of resources, as we were talking about earlier, the market value change on those investments, you can really see that change here. And your deferred inflows of resources, that credit was 4,484,000 the prior year versus 1,765,000 the current year. So the valuation adjustment is really driving that. So as of June 30, 2021, the last measurement date for those PERS 1 and PERS 2, or PERS 2 and PERS 3 plans, you would have seen pretty good valuations on those assets set aside to pay for that obligation. And as those come back down or to a more current market value as of June 30, 2022, those same assets weren't as valuable. And so you can see that drop here in your deferred inflows of resources. If you take your assets plus your deferred outflows and subtract your liabilities and your deferred inflows, you get net position, or that which is available for future periods. And as you can see, those rates are really pushing through here with an increase in your net position from 58,462,000 to 68,452,000. So as we see that increase in net position, the thing that I would tell you as a part of reading those rate studies is that there certainly seemed to be a highlight on rates being, having funds available for construction projects as a part of the rate design. And so what you'll see as far as the accounting goes here at the district is that you will see a short-term push in your net position because you have that additional funds available in the short term to pay for those assets. But those assets are assets and they have useful lives. So you won't see the depreciation or expense related to those investments immediately like you will see the revenue, which is pushing through to the net position. So a little bit of the mismatching of your line extension and revenues related to that versus the expenses or the depreciation on those assets. So, you might see a short-term bump in financial condition, but really the long-term aspect would be that we have depreciation related to that net position that's yet to come. So you should see, if all else not equal, that come back down in the long term and the design of the rates. That would be my take on that. Is there any questions on that? Okay, so that's a look at your assets and liabilities. I was going to cover as well the statement of revenues, expenditures, and changes in that position. So your income statement, and I'll scroll down and we'll take a look at that. Again, for contextual purposes, we have the year-over-year view. For the year ended December 31, 2022, the district had operating revenues of $46,457,524, which were up approximately 10% from the prior year of $42,308,586. Highlighting what we spoke about previously, seeing that impact of that rate study. Your non-operating revenues were down slightly, 34%, but dollar-wise, not as much, from $1,048,691 to $696,661. Your operating expenses, which I think is just hard to do, were within 1% of the prior year. So $37,477,869 versus operating expenses in 2022 of $37,974,577. So in here, you will see your cost of power, which is the largest portion of what the district is paying for, power and water, as well as costs for labor, benefits, maintenance, and operations of the lines. And so that's, year over year, that's hard to maintain that level of expenditure. So kind of goes to show that, you know, really trying to keep the loss cost steady here at the district for the customers of the district. Not operating expenses were also steady, 2,832,000 versus 2,809,000. And this is mainly going to be interest expense on the long-term debt. And so as you pay that down, the amount of interest you should see each year should fall according to that debt service. So you had total income before contributions in the current year of 6,369,000 versus 3,046,000 in the prior year. You also had additional grants this year, which you can see is recorded inside of this capital contributions and grants line item. So you're, you know, historically that have been line extension payments, and now we have grants recorded there. As you get those grants, that would be the line item that's recorded in. And so that's up to 3,619,000, knowing that the fiber and broadband grants are also in that line item. So you had a total change in fund net position increase of 9,989,000 in 2022 versus an increase in net position of 4,751,000 in the prior year.
So all of what you've shown us so far does not factor in depreciation.
It does. So in this operating expenses line item, you will also see that depreciation inside of there. And I was going to break it down further, but I wanted to cover the year over year changes contextually there, and we can get we also have that broken down. So that's a condensed balance sheet and income statement. This one's a little bit more to go over, but we have the actual balance sheet that we give an opinion on. This is just 1 year, not comparative. But if you look in here, we on the second page, we have your depreciation and amortization of 6,557,000, which is up from the prior year and really relates to putting new assets into service. We would expect that to grow. It's in line with our expectation as a result of our audit procedures. Any other questions on the income statement? Okay, we'll keep it going. So, you know, I think the balance sheet and income statement are the most important. We also, in the audit report, have a cash flow statement. So as I was telling you earlier, we saw a net decrease in cash of approximately $5,029,548. And this really gives you the sources and uses of that cash year over year. So your net cash provided by operating activities, which is in 3 buckets: receipt from customers, payments to suppliers, and payments to employees and for benefits. You had total receipts from customers of 44,841,000 on the cash basis, with payments to suppliers and employee and benefits, reducing that out to bring you to a net source of cash from operating activities of $8,852,311. You also had increases in cash or sources of cash related to non-capital finance activities. So this is going to be your assessments receivable and your assessment revenues related to your timber tax and assessments locally, which had you an increase of $656,340. And then we have our third area, which is capital and related financing activities. So here we've listed out in dollar value your net investment in capital assets, cash basis, and then servicing on the debt. So you invested in cash basis in capital assets of $9,891,000 in 2022, with also reductions of cash stemming from principal payments and interest of $4,237,000 and $2,696,000, which are the big areas there in your net change in cash from capital and related financing activities. And then in your investing activities, you have interest earned on your bank accounts and investment accounts of $77,669. So if you net those increases or sources and uses of cash, it gets you to that change of $5,029,548. Any questions on the cash flow statement? Okay, just going to cover some, I think, important notes here in the financial statement, which are, there's a lot in the notes to the financial statements. The main thing is that we didn't have any change in policies that affected financial reporting for this year. But if that had been in there, it would be noted in the accounting policies area, which certainly has a lot of information in there. I wasn't going to review all of this line item by line item, but I did want to cover your fixed asset schedule. So this has detailed information of increases and decreases as you invest in your fixed assets. So for the year ended December 31, 2022, you can see that starting construction in progress was $13,819,406. You had additional projects during the year, net increases of $2,909,876, and then transfers to assets. So when you close work orders to plant, that would be where that's recorded of approximately $3 million. So steady on your construction progress year over year. I think as a part of the audit, this was one of our areas of focus for the year ended December 31, 2022. And I think that's, really one of the areas that our firm specializes if you compare this to another. And so I think that as we move forward, there'll be even more closed out of that year over year to plant and started to be depreciating, i.e. impacting your rate design as we move forward to the 2023 year. As well as the impacts of adding the four corners in the auto building. You can see that in the increases line item year over year, as well as various other projects get you to buildings net ending position of $8,879,862 year over year. And your long-term debt, there's no new debt, but I do think the most material debt that you have is the note that you issued to buy the old system, which started at $114,743,000 to purchase the plant. And it's down to $88,679,827 as of December 31, 2022. So, pretty good headway made on that loan and still plenty of net position available to service that debt. So, and that's really the largest loan and the bulk of the debt outstanding to the district year over year as a part of what you needed to get started. And just a quick summary, as just kind of highlighting what we talked about earlier, long-term debt in your additions column 0, so not leveraging anymore in the 2022 year, really using those rates to help you do the projects that need to be done as a part of your operations here at the district, as well as that debt service amount principal of $4,237,000 year over year. The last few things in here I think are important because you don't have really a lot of control over y'all having employees as a part of the PERS plans, PERS 1 and PERS 2 and 3. But it is important to know that decisions they make at the state level do impact your financial statements. And so seeing that impact, I think, is important. And we have a schedule here provided in the required supplementary information where we cover that. Just to look at the health of the plan, you can see that all plans measured on June 30 year ends, which was the 2021 measurement date, spiked, and fiduciary plan net position as a percentage of the total pension liability. So as of the last measurement date, PERS 1 plan was approximately 90% funded, and it also had a dip related to the market value of investments down to about 77% and as of the June 30, 2022 measurement date, as well as the same spike based on the measurement of those assets in the PERS 2 and 3 plans, but you still are overfunded on that PERS 2 and 3 plans at 106% as of the December 31, 2022 financial statements. So balance sheet, income statement, cash flow, notes to the financial statements. Did y'all have any questions about information I've covered? Okay, I've also prepared a short look at some year over year metrics that I think are kind of give a good picture. And so I wanted to cover that with you all as well, if I could. It kind of on graph form shows where you've been in historically and where you are this year. So if I can pull that up. There we go. All right. So I prepared a couple slides here and we'll go through those if you'll have any questions. I mean, it's just providing extra data outside of the audit report that I thought was unique or had been presented before, and just wanted to continue that process with you all. So as we talked about sources and uses of cash, we have a 4-year outlook on what your operating activities were producing as cash for you, and then how that was used year over year. And so we see on the top side, that's the cash from operations, and then on the bottom side, cash used for financing. So the main thing here, as we covered earlier, is that you sell electricity, water to customers, and you use that as a part of your rate design to pay for investments in capital assets, as well as employees' benefits and payments to vendors for the supplies you need to work on the line. The thing here that I'm looking at is that ratio is pretty steady, just short of 9 million for operating cash. We're a little bit higher in operating cash in the prior year, as well as on the bottom side, we're seeing that increased investment in capital assets, mainly driven by the buildings in the 2022 year as those were closed to plant. On the second line, we can see year over year in your investment in capital assets, almost approximately 10 million for the 2022 year. But you can see that the district's been hovering between right around 8 to 10 million year over year, and probably would be something that you would expect as you move forward into the future, and something that those rates are designed to help fund as you move forward. This is kind of a look at your mix of expenses year over year. And so, really what I was looking at here is you had a slight increase, as you can see, in 41% versus 38% in your cost of power, which, we audit in approximately 20 states. And so looking at how people get power is one of the most important things we do. And the hydropower here in the state of Washington really seems to provide a really steady, stable power cost, as far as it didn't seem to fluctuate we got about 5 years of data to look at. Over the 5 years, you're hovering around 4.5 cents for that cost of power. And so that's really something that's unique to hydropower, and a good deal for the district, that cost of power can remain that steady. When we see other areas of the country, the South and Texas, where we're looking at 7.5, 8 cents just to get it to the lines. That doesn't include getting it over the lines to the customers. And so really stable here in the state of Washington, as y'all have it on the cost of power, which is really a unique thing. Although we did have about a meal increase year over year in that for 2022 versus 2021, but pretty steady. And interest as a percentage of long-term debt, as we talked about earlier, no new debt. So we would expect that to go down as you pay down the debt, and we would see a spike here if you had new debt during that year. Interest as a percentage of electric revenue, as we covered, the rate design is producing that increased availability of funds for capital investments or capital infusion, is down to about 6% from a little over 7% in the prior year. Electric revenue per customer still right around 2,000 per customer as it goes through your system. But I think, as we've covered here, you were down to the COVID years, about 16.5 in the COVID years, and we have seen increases year over year as I think as of June 2021 was the first implementation of the rate designs, or shortly thereafter. So about 2 years now, and you can see how that's the impact of that. And then bad debt as a percentage of sales. So, I think as the COVID years were implemented, you were over accrued slightly, probably. You had some leeway in your allowance for bad debts, customers paying. But as we move forward to 2022, you were at a good spot in that. You're still writing off folks, monthly as they meet the criteria to be written off and are approved. But as far as expense goes, you had no bad debt expense for the 2022 year. Electric revenue and power cost per kWh sold. So as we were talking about earlier, just the steadiness of your cost of power is just, I think other areas of the country would certainly enjoy that as it were, but hovering right around 4 cents on your cost of power, and then up to about 10% on average for a kWh sold. And then finally, net position by years. I think, as we talked about earlier here, it's important to note, as you see these increases in net position, that really the asset that those dollars are invested in won't be depreciated over the same term. So if you stopped right now with your net position, there would be a lot of depreciation out there that would reduce that net position. So just something to keep in mind, but still something as a financial health indicator goes that you want to see an increase year over year in is your net position. So really healthy spot for the district as a result of the numbers as they show as a result as of December 31, 2022.
So if we wanted to access the full report, where would we find it?
we go. Microphone one. The commissioners I've provided the audit report to the commissioners. I've emailed it. But we will, after tonight, probably tomorrow, we'll get it, make sure it's posted on our website. We didn't want to post it on the website until it was presented to the commissioners tonight. So we'll do that, and the presentation that Tyler the PowerPoint presentation that he just went over will be on the website tomorrow. I'll give it to Will so Jameson can get it to post it on the website tomorrow. So, but the report's been emailed a couple of times, I know, to the commissioners, so you guys should have it, but it will be available on the website tomorrow for the public to be able to access the full report. If not, I will make sure you get a copy of it, Ken.
I'm looking. Okay. Yes, there it is.
Okay.
Thank
So
you.
So, that would conclude the information I came prepared to speak about related to the December 31, 2022 audit. Again, I just wanted to say, thanks to Mike and his team for working with us. I know changing audit firms is not fun. We all have our own internal control walkthrough questionnaires. And so there's certainly a lot of front end work that goes to even getting us in the door here. And I just wanted to say thanks to him and his team for allowing us to do it so early in January. As well as thanks to you all for giving us a chance to come out here and do some work. And we appreciate that. We know that y'all hire us as the board. And so we appreciate the opportunity to serve Jefferson County Utility District #1. So thank you.
Yeah, thank you, Tyler, for coming out. Thank you to the finance team. Most of them, they left because of the end of the day here. They were here listening. So yeah, it was a quick turnaround. We weren't sure how we were going to do it. Especially Tyler and his team, they really gave us a good audit, made us really think about some things. So we're looking forward to it. I'm going to go ahead and bring it up now. We would like to engage with them again next year. We have an engagement letter. Just wanted to bring it before the board because Ken will have to sign it. He signed the last one at the last minute. Kevin and Ken will sign it to approve it. So Kevin will sign it as the manager. Ken will sign it as the board president if the commissioners are okay with that. But we would like to go ahead and engage with them for the 2023 audit. So that way they can start planning, we can start planning, but they've done a great job with it. We've appreciated everything they've done. So we would I don't know if we need a motion to approve it. Okay, Joel is just giving me the thumbs up that if we get a motion, I know Dan's got a question, but if we get a motion to go ahead and engage with BSGM and Tyler and his team again for the 2023 audit, I would appreciate that.
And Dan has his hand up to you.
Commissioner Cooper.
Yeah, I just wanted to clarify our process that, we're not required to put this out to bid, are we? I know that we used Jackson Thornton in succession a couple years. So just making sure that we're following procedure and policy and that, we don't have to put this out to bid or anything like that.
Mr. Paisner.
Thanks for asking that, Dan. We actually did go out to bid, and this would be part of the bid process. We, Jackson Thornton, I want to dovetail on what others have said and just express my appreciation to the firm for stepping in, but we're fine on procurement. We've met our obligation. I think the idea is that after a few years, you kind of want to go out and see what's out there. It's recommended, but that's changed over time. I think it used to be that it was recommended that you change auditors every 3 or 4 years. And what some of my other clients do is just if you're happy with the firm, that you try and switch up partners in charge so that there's some, changing of the guard and have someone else come to look at it. But I just want to say that, these guys stepped in at the very last moment and just, we were beating the bushes and we ended up finding a really well qualified firm. So yeah, if you could pass a motion accepting or authorizing the chair and the general manager to execute the engagement letter, our auditors will have 6 more months to work on it than they had last time.
So Joel, to sum up, we did go through a bid process when we first selected Jackson Thornton, and we were scheduled to use them again. I don't know if that was going to be the 3rd year that we were going to use them. And they issued us a letter saying, sorry, we've lost key staff. We can't do it.
Yeah.
And we pulled in this firm, as you said, in short notice. And in your opinion, we have now switched auditors, which is a recommended process. And we have a relationship with them. There's no reason that we have to go out to bid now. We can continue to use this firm. Okay. I will
Right.
make the motion that we retain, and I don't have the name in front of me.
BSGM, just
Yeah.
call,
For the audit of the 2023 year.
I'll second the motion.
I'm sorry, could we include authorizing execution of the engagement?
I'll amend the motion to include authorizing staff to execute necessary agreements.
Thank
And
you.
again, I'll second.
Further discussion on the motion? All in favor of the motion? I'm sorry, Mr. Chair.
I just had a quick comment on this. I completely agree with the idea that you should not stay with the same auditing firm year after year after year after year, because they tend to get basically too close and too much involved in your affairs on a day-to-day basis, and there's just a risk of them not willing to be critical enough of the organization. I think it might be a good idea for you to change a little bit of your governance policy, perhaps, to say that you must change auditors no less frequently than, say, every 3 years. I mean, if I am asked to do a proxy vote on a stock or security that I own, I always say no to retaining the current auditors, just because of this problem. It has happened all too often that the auditing firms have gotten too close to the boards of directors. So, that advice that Mr. Paisner mentioned, I concur with, and I think you ought to maybe formalize it again in your governance procedures for the board. But other than that, thanks to these guys for stepping up at the last minute and doing the work.
So further discussion? All in favor of the motion to authorize the PUD to sign an engagement letter with Bollinger, Seggers, Gilbert, and Moss for the next year? Please signify by saying aye.
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 Aye. You're hired.
thank you, board. We appreciate that. And we look forward to working with Tyler and his team again next year and having this, so. I think that's everything, unless you guys have any other questions for Tyler or for
Mm-mm.
about the financials or anything.
Just thank you to both your teams for all the hard work.
Yeah, thank you very much.
We work all year round, so if you think of something that has audit implications, then we're available to zoom in or whatever we need to do. So you just know that we're a resource and we're out there if you need us.
Thank you.
Thank you. The next item on our agenda is manager and staff reports. Mr. Street.
Yes, and this will be brief. A quick reminder, Thursday next week on the 25th, the ICG has their meeting. And then we continue to get applicants for the line department. We talked a week or so ago about adding the third crew. We're getting very close to the third crew, which leads me into one of the things we're discussing, and then I'll spend a little bit of time on in manager's report, is where we are with broadband and where we think we need to be. And we've talked in the past, and we are behind in our broadband. We need to get some engineering drawings out. But one thing that the PUD can use to help expedite part of this project is to install some of the fiber ourselves, use our crews. If we go down this road with our crews stringing, and I'm going to call it mainline, but they would string the fiber from coming out of the substation along the main road, down the main drag where everything would tap off of. Our crews have done this in the past. We've done it for SCADA. It builds a little bit different with the broadband than it does SCADA, but they're more than capable. We are looking at this. Will and I have a meeting on Thursday where we will have a plan. One thing that I do think we will quickly is go to our engineering firm in Minneapolis or in Minnesota. We will go there to try to finalize some engineering drawings. That will probably happen as early as mid next week. We're not sure. We're trying to push as hard as we can. And as with everything right now, manpower is an issue, not only for line crews, for broadband crews, for everything. There are also issues with the engineering, and they're very close to being able to issue the drawings, even though they're shorthanded. That I believe if Will and I could spend 3-4 days side by side with them, we could get things finalized to the point where, if we choose, our crews could step up and start stringing fiber within a couple weeks to a month outside of Chimicum or Quilcene substation.
Commissioner Tupper?
So Kevin, what you're proposing, is there any labor agreement augmentation or that's going to have to transpire, or will we be able to move forward on that with it seamlessly, or so on our labor side of it? And then the second question is if you're not successful with the engineer of getting things when you want or need it to, how far out does that push us, for lack of a better term, of being able to get some revenue on the broadband side coming in?
So on the labor, Dan, our crews have done it in the past. So for us to step up with our crew to start stringing fiber is not an issue. So we have that. We would, there'd be a few tools, a few things like that to make it an easier process. But as far as labor goes, we're fine. Your other question is a little harder to clarify, Dan. And these are examples that Will and I and others have talked about. To take a project like this out to bid would take 4 to 6 weeks. We have our crews starting it. That in itself picks up a huge amount of time. If, for example, Will and I can visit with the engineers and get the drawings to a place where our crews are comfortable and our engineering staff is comfortable, that may pick you up another 2 or 3 weeks, maybe a month. So we're talking real time here, Dan, with tight timeframes.
So one quick follow-up, is there going to be a distinction between the downtown project with the $2 million loan for the businesses as opposed to the fiber to the home residential?
So right now, our concern is fiber to the home in the Quilcene Discovery Bay area. That has to take our resources right now. We have to get that job started. So at least for now, we do have some of the Finley engineers that work on underground looking and working in downtown Port Townsend. But that's a secondary focus for us right now, Dan.
Thank you.
Any other questions? Like I say, it's brief. I am traveling. I will be back tomorrow afternoon. But any questions?
I had a question.
Go ahead.
This does not relate to what you went over, but it relates to these ongoing discussions we've had about the BPA 2028 contracts. And I'm wondering if the staff could put together something that shows what our existing tier one BPA allocation is and what our load profile looks like in terms of that. I just feel like I want to get smarter on understanding what our relationship with BPA is, how much headroom we have left, and if they've given us any indication of what our tier one allocation would be post 2028. Does that make sense?
So Jeff,
Yes.
I think WAPEG may have put that out in an email a while back. They have a tool for us to look at proposals that are on the table. So it might be there.
In regards to the 2028 part of it? Okay, so then Kevin, I'm just wondering is that something that staff could do, is kind of illustrate what our loads look like when our peaks are, and isn't an immediate thing. It's more of kind of a long-term educational understanding of our relationship with BPA, with how much power we're using and what our tier one allocation is. Does that make sense?
It does, Jeff. And I think it would be we would look at a 2-tier approach if this would be acceptable to the board. For example, I exchanged emails today quite a bit with our BPA rep. They're talking about several things that are happening right now with BPA, so that we would get someone that is BPA contract specific to come in and talk to the board. And then we can put some information together. Like Dan said, they do have quite a bit of BPA spreadsheets. The formulas aren't, I don't know if they've been really massaged to the point where we need them to be yet, but we can bring somebody in and really start talking about that 2028 contract, because we're going to be forced to sign something very soon within the next year to 18 months. I think BPA will be finished up.
And for me, it provides the context too of understanding what our loads look like. Every time when we're at conferences and somebody's talking about energy storage, or somebody's talking about electric vehicles, or somebody's talking about whatever, demand response, for me, it would be helpful to understand, what does our profile look like? And because it's almost like the patient, unless we understand the patient, we don't really understand how healthy the patient is, how much room we have to grow, and what tools might be applicable to us. So I just feel like I'm pretty ignorant right now on those issues.
Yeah, we'll put something together. That'll be a good board meeting.
Okay, thank you. And I guess, did the other board members agree? Does that seem like something that would be helpful?
Yes.
Yeah, I think the more information staff can come up with our own unique circumstances here on load and peak and that sort of thing, it'll be helpful for us to plug those things into that tool that I talked about that WAPEG or PPC have put out, or BPA may have put it out as well.
Great, thank you.
Well, and I will throw this in. We're looking and we're working with BPA right now on adding the 3 megawatts for the ferry system. BPA and that group has been spending quite a bit of time looking at our load, analyzing it to see about the ferry coming in and how that all interacts. So the timing's good.
Kevin, what's the timing on that conversion to electric ferries?
It is a moving target. Tom Tersch may have better information than I do. I believe 2032 is our target year.
Hmm.
The PUD would try to have our infrastructure in and ready to go in 2030.
Okay, thank you. Additional reports, Mr. Street?
Nope, that's it for tonight.
Commissioner reports. Commissioner Tupper, would you like to start off?
Sure, I can go ahead and go. So I attended the PPC Members Forum on Zoom, May 3rd. I attended the EDC Team Jefferson meeting in Port Townsend on May 4th. Bill Wise of Port Townsend was the guest speaker. He talked about his past involvement with EDC and county action groups that he'd worked with as well, and the PUD buyout of PSE and the BTOP grant. The EDC strategic plan and goals document is being finalized and should be ready by the next meeting at the beginning of June. Work is also being done with EDC on preparing a work plan and a funding plan for EDC, which should be complete, I think, in early July if they can stay on schedule. EDC is exploring the pros and cons of going from a C6 organization to a C3 entity. I won't go into the weeds of the details on that because I don't necessarily understand them myself, the nuances of those, but they are looking at it. I think they're leaning towards just staying with the status that they have now, would be my guess. The director is preparing EDC deliverables information for the upcoming report to the State Department of Commerce as mandated, as an ADO. And interesting little note here, EDC has identified 5,000 businesses in Jefferson County. Number just blew me away. I know exactly how those businesses are cataloged or identified, but that was kind of an interesting number that came up. I met with GM Street on May 5th. I attended the Jefferson Fire Chiefs meeting on May 8th. Matt Stewart was there from Jefferson County Public Works. He's now taken over as JeffCom 911 director, for those that follow that stuff. I attended the NOAANET meeting in Spokane on May 10th. Everyone at NOAANET, all the employees and staff at NOAANET are now in the PERS or have been cashed out. So that's moving forward. NOAANET's financials are stable and appear to be trending positive with 59 days of liquidity on hand. 8 million in loans by 9 members will leave NOAANET with about 2.2 to 2.4 million to cover the remaining shortfall in pension liability, which will likely come out of a bond draw to cover that when they get the numbers finalized. The CEO was authorized through by a motion or resolution to go ahead and draw up to 3,000. So they had some leeway if anything changed between now and finalization dates, that they could go up to 3 million on a bond draw. NOAANET has hired 3 new analysts and a new operations manager. The new manager's name is Tina Meyer. She's that replacement, and she comes out of I think they said the 911 world. I'm not sure, emergency services, something like that. There was some discussion by NOAANET staff on utilizing the AI algorithm ChatGTP, which Mr. Tiersch has put us on to a few months back, I remember. They are using that to help them with engineering issues that they have. So just something maybe that we would watch what happens at NOAANET and decide if that's something that would help, our engineering or, our staff to utilize that down the road. NOAANET has a strategic planning workshop in June, and I actually spoke with the CEO today, Craig Nelson, or actually, excuse me, I looked at an email that came in from Rich Knoll, and they're throwing a date around for the 29th of June. So I know if our commissioners, I know we're going to talk about it later, maybe. The 29th of June seems to be the date they're looking at right now for that strategic planning meeting. Discussion about the bylaws revealed some of the topics of interest to some of the members. understanding the compete versus non-compete language in the bylaws, voting rights by percentage or weighting dependent on ownership percentage. Again, this sounds very cryptic. I don't quite understand it all myself yet, what some of the, what it might mean, what kind of suggestions might come forward on how percentage of ownership and voting rights will work with the bylaws if there's a movement to change those. One of the other things that was thrown out there was equal ownership percentage structure, where we're, if there's 10 owners, you'll all each have 10%. Again, a lot of issues that would be needed dealt with if that were to be something that would be changed on how ownership structure would work. And also member assessments and equity, I think, was kind of the term that they were looking at to use, and how member assessments could be more equitable. Again, I don't know what that means, what context you put that in, until we hear more about that. There's again, new topic to me, so I'm not exactly sure how that's gonna work. This is a new topic for me as well. NONET is also exploring and working toward becoming a backup source to serve as a tier 1 timing source. I'm sure we have people in-house or maybe on the call that understand what that is. It's basically to help with 911, from kind of a national security standpoint for online or internet accuracy. So again, way beyond my pale of what I know about this at this point in time. So that's something that NONET expects, that type of venture would generate positive revenue eventually. So again, that's something that they're looking at and maybe moving towards right now. At the PUD Telecom Workshop on May 10th, I transitioned from there over to the other meeting, which was the Telecom Workshop. Mark Visconti from Washington State Broadband Office focused on the upcoming BEAD funding. He said that pole attachment issues will be a major factor in grant buildouts, and likely more as a contentious factor than a positive factor. So if I understood what he was saying correctly, that's kind of the outlook there. There was a panel on digital equity navigators. It was interesting to hear about a program by Goodwill Industries aimed at helping people with different aspects of understanding and utilizing broadband and the devices associated with that. So that's something at EDC I might ask, if they're aware that that's going on, and if our local Goodwill is, if they're talking with them at all about whatever that program is. On the 11th at the Telecom Conference, Washington State Senator Matt Benke and State Representative Drew Hansen talked about the progress made through legislation over the past couple of years to help PUDs, ports, and municipals to provide broadband, and the new potential legislation to help augment or improve on those previous gains that they would like to help shape through the next legislative session. So again, that's something that, we'll probably weigh in on it. WPUDA, and we'll probably maybe even weigh in ourselves as we're looking at grants and different things on how we're going to move forward. Our GM was on a panel that talked about, I'm surprised he didn't talk about that in his report a little bit. He gave way too much credit to the commissioners and not enough credit to staff, in my opinion, on the successes that we're having. Let's see, to get broadband funding and related to getting broadband projects moved ahead. I attended the first day of the NWPPA annual meeting on May 15th. The bulk of day one consisted of state legislature updates from the 9 member states of the Government Relations Committee, and one representative from British Columbia. Ryan Surratt, who I'm not sure if he's legal counsel or a consultant for NWPPA, gave a report on the congressional dynamics in play in Washington, D.C., the debt limit discussion being something that's going to impact everything related to utilities, moving forward as that thing plays out. Chris Markland, Deputy Staff Director for U.S. House of Representatives Bruce Westerman, talked about the House Committee on Natural Resources and the work being done to help the energy sector. The same things that we hear about here in Washington State for the most part: wildfire and forestry management, permitting reform, judicial review, and things like that. And then today's meeting was basically we voted on bylaw changes and who the new members of the board and trustees for NWPPA would be. And then also there was presentations by 2 or 3 individuals from Alaska, mostly, I think they were all co-ops, as I recall. who talked about the history of energy in Alaska and the steps they've taken and how progressive they're getting now with battery technologies and other things like that to decarbonize. So with that, I will end my report, and actually I probably should go over my calendar a little bit. Now, I think it was in our packets for calendar. Is there an ICG meeting on the 18th? I had one down for the 18th, and now I know there's one the 25th.
The 25th.
It's now the 25th.
Yeah, I think that was the 18th is what we had listed in the original. Now I see here in here that there's one on the 25th. So some clarity on that if we could.
Okay.
Dan, can you hear me?
I can.
Yeah, I pulled out the agenda and it is the 25th. It's a week later than it was originally scheduled.
Okay. I wasn't sure if it was a second meeting or if they had changed it, and I've been too busy to follow up on it because I knew I was going to miss the first one for sure. So I figured I had another week to figure that one out. So anyhow, yeah, I'll see where we're at for the ICG on the 25th then. I meet with Kevin on the 19th. I'm going to take the tour of the Columbia River or the Columbia Generating Station reactor on May 24th. And I will try to do WAPAG on the 25th as well. I know that coincides now with the new ICG meeting. So, but I don't think they're at the same time. So I'll see how that works out. And I meet again with Kevin on the 2nd of June. And that concludes my report for now. Thank you.
Commissioner Randall?
Okay, thanks, Dan. On the 4th, I listened in to PPC meeting and had a meeting with Kevin Street. On the 5th, I virtually attended my first PNUC meeting, and that's the Pacific Northwest Utilities Conference Committee. And this is one of those groups we're kind of checking out. And my impressions were they're a really efficient group in how they meet. They did a round table in literally like less than 10 minutes with everybody. It was just really fast, really professional. And then they had 3 speakers. And the first speaker was Eileen Quigley of the Clean Energy Transition Institute. And she's actually a local. She lives down in Quilcene. And they were presenting a study that's it's done now, but it's going to be formally released in June. And it's called the Northwest Deep Decarbonization Pathway Study. And it's a multi-state study that covers basically the same area that BPA serves. And it's looking at they hired consultants to develop very detailed models on how our region can decarbonize. And I won't get into the details of it, but they've got multiple studies that kind of lead up to this on their website. And I think it will generate a lot of discussion once it comes out. But it talked about things like how much of wind resource exists in Montana and Wyoming. And it's just massive compared to the renewable additional resources potential that we have in Washington. And a lot of it, though, is prefaced upon we need more transmission. This is something we keep hearing in lots of different meetings. And the second speaker, they had 3 speakers in this meeting. The second speaker was 4 people from the Bonneville Power Administration. And they had basically the director of their transmission, and he thanked them for basically focusing on how important new transmission is going to be. And one of the comments made later by Scott Kinney, who is a representative of Avista, and he's the board chair of PNUC. So Avista is the for-profit utility that's kind of centered on Spokane and extends into Idaho and parts of Eastern Washington. He said transmission is a game changer until we have, and this is his opinion, until we have an RTO that sets up a cost recovery mechanism establishing a tariff for reimbursement, it will be hard for anyone to move forward. And so for me, it's like, it's kind of putting together pieces of the puzzle. Why don't we have transmission? Why don't we have transmission? Well, it sounds like the current setup we have doesn't really allow for somebody who builds transmission to know how they're going to get paid back for it. So he was pointing out how an RTO could benefit that. And we know that that's something that will not be easy to happen, but there are forces moving forward on that. The third speaker is a gentleman by the name of Tom Gross, and he's with a consulting firm that I wrote down is called Slalom. And his focus is on electric vehicles and renewable energy. And he made an interesting comment. He said that Thomas Edison would recognize the baseload power grid because he built the first power grid in 1892 in Manhattan based on a coal-fired power plant and a dynamo. And he said, however, the future of the grid will be very different. It won't be centered on a power plant. Instead, in his opinion, it'll be centered on the customer. And the customer will oftentimes be an electric vehicle user. And that it's a challenge for utilities to not think of ourselves as the center of the organization, that we need to think in planning and in communication and how we structure ourselves with the customer at the center. And he said that this new ecosystem will have intermittent resources, customer generated power, customer owned electric vehicles, and probable time of use charging. We'll probably have more storage built into our grid and demand management. And then he said something kind of surprising. He said, if you don't think things are changing, look at the big oil companies. He said they have been planning and positioning themselves for a decarbonized future for quite a while. We aren't seeing as much of it here, but in Europe, he said Shell Oil owns 500,000 electrical vehicle charging points. So he said, you watch the money and you can see how things are changing. But he said, it's one of the challenges for utilities is finding the people who can think differently, who can think from the customer's perspective. And somebody asked, well, where are we going to hire these people from? And his comment was, you already have them. He said, they're the rebels in your organization. And I'm looking at Will O'Donnell right now. They're people who think differently. They're people who embrace change. And he said, look for people who are good at customer relations and good with data as you try to change how you do things. On the 8th, I met with Mike Bailey and Will, had a wonderful round ball break where Will and I talked business, shot a few hoops and talked business at the same time. On the 9th, I met with a customer by the name of Greg Edison, who has an extensive background in the utility industry. He's retired, but he's bored and has a lot of skills. And I kind of passed him on to Don McDaniel to see if there might be some overlap where perhaps the PUD could use some of his knowledge. On the 10th, I attended the same NOAANet board meeting that Dan was referring to. And what I heard them say was they very much want to simplify the voting method. They want to kind of keep what I heard Roger Wright was summarizing a lot of this is that they've got this ownership with different levels of ownership, but a lot of folks felt like that actual ownership would not really come into play unless NOAANet is sold. And he said, we've said it many times, NOAANet's not for sale. Or if a dividend was ever issued, NOAANet has never issued a dividend. But he said this difference of ownership and voting creates lots of problems anytime a big decision has to be made. So it sounded like there was a large majority of folks who felt like that NOAANet should go to kind of an even, everybody gets this equal votes if you're a member. So that'll be interesting to hear how that comes along. And they've got their strategic plan, which we're going to talk about later tonight. But it's been very interesting for me to listen into these NOAANet meetings, and it's kind of like looking under the hood, getting to understand a little bit more of our relationship with them. It's helpful to see how they work on their own. Had a phone meeting with a number of PUD members, Mark Dodon from Energy Northwest, Rebecca Wolf from Snohomish PUD, Pam Hickey from Pacific PUD, and Christine Grant from Whatcom on the 12th, where we just kind of talked about things that were happening of mutual interest. On the 16th, that was this morning, listened into my first Northwest Planning and Conservation Council meeting, and this was their power committee, and their full board meets tomorrow, and I plan to listen in on that also. Some takeaways on that was I was kind of surprised by the representatives from Montana and Idaho. They were more progressive than I thought they would be. They were both talking about the need for storage and renewable energy, and they were really pushing BPA on some of these things that we keep hearing over and over again, like the idea of if a utility develops its own, carbon-free energy project, that BPA then will take away that equivalent of tier 1 allocation. And both reps, the Montana and Idaho rep, asked questions about that. And the representative from BPA was Tim Johnson, who I don't know if Joel knows Tim, but he's one of their general counsel folks. And he just totally avoided the question about that being a penalty. He just kind of restated it in terms that it made it sound like it made sense, but the answer was yes, they do penalize us. And then the other fellow from Montana brought it up in a way of saying, well, you're proposing to give utilities that self-funded conservation credit with more tier 1, but you would penalize our utilities if we developed carbon-free energy. He said, why are you treating them differently? And again, he kind of developed this little answer of, well, when you develop energy, you're instantly satisfying load. Whereas when you're working on conservation, it's cumulative over time and it's different. And he just kind of ducked the question of why is they getting credit one way versus not another, other than to say it's our policy is kind of his bottom line, and he doesn't make policy. I'll listen into the full council meeting tomorrow. I'm glad that Dan brought up the ICG meetings. I had it on the 18th, so I will note that that's now on the 25th. We'll be a part of listening to the Olympic Workforce Development Council meeting on the 19th. And then the North Olympic Development Council is scheduled to meet on the 25th, just before the ICG meeting. So that'll be fun. And then long-term, I did register for the APPA annual conference in Seattle that runs from the 18th to the 22nd. I don't know if any other folks are going to attend that or staff. And there's a conference workshop. They're offering multiples, and I chose to sign up for the one that's about preparing your utility for electric vehicles, the kinds of issues you're going to have to deal with. And that is my report.
Thank you.
Mhm.
Before I start my report, I want to ask our general manager, no one that recently sent out, and I think this is something that Commissioner Tupper shared with us. It had to do with the return on investment. And it looked like Jefferson PUD had something like if I'm recalling correctly, 360% return, whereas all of the other member utilities had a return in the low double digits. And that was certainly striking. And I wonder if Kevin, I wonder if you've seen it, and is that accurate? Commissioner Tupper, you have your hand up.
Yeah, so I'll chime in real quick. I talked with Craig today, and that was another topic that I talked to him about. And what they did on that one is they rolled the BTOP grant into that number, showing I have 4 million or whatever it was total and coming to us or whatever. So I asked him, about the dynamics and the metrics, and the context that the other entities, owners, members, how they came across that. And he didn't have that information available at the moment. He offered, to look into our things a little more, but I don't know how we're going to be able to kind of compare the numbers that we're getting, how they affect us. We could argue those numbers, but I'm not sure how the numbers that are being applied to the other utilities, how accurate those may or may not be, in what context, if it's apples to apples or something different. So again, I'll let Kevin chime in, and I'd like to respond to Jeff when we get done with this, back to Jeff's report just a little bit too.
Mr. Street?
Ken, I've seen the numbers. They don't make any sense to me. I have a meeting set up with Moss Adams, trying to look at some different options with different numbers that maybe no one that can provide us, but the numbers did not appear to be very, I'm just not sure where they came from. That's all I can say is I don't exactly know how the numbers were calculated. They don't make sense to me.
That would be very odd, an agency claiming credit for federal money that we were awarded through the BTOP grant. That somehow that, they helped us apply for it, but it certainly wasn't money that came from NOAANET.
And again, I think this probably just points to where maybe we need to set up a meeting with Craig and his team and our team to kind of hash this out a little bit, try and do the best we can to find some consensus.
So I'd like to proceed with my report.
Ken, if I could, real quick, 2 quick points on Jeff's report. One is Jeff was accurate in the way the discussions went about some of the bylaw issues, but I'm not completely sure that I understand, some of the comments that were made about what the real angles and what the real outcomes are that they're looking at or looking for. So I'm not really willing to say that there's a consensus amongst a majority or anything like that of how they want to see things change in ownership percentage or voting leverage or weighting or whatever. So I kind of want to wait and hold judgment on that till we have those discussions. And the other quick thing was too, there was a panel here today with 3 of the former BPA administrators. It was facilitated by Deborah Smith, formerly of Seattle City Light. And they talked about the RTO and about transmission. And the simple answer out of them was that, for things to meet the goals that are being set in Washington in particular, but also Oregon and other areas, these 2030, 2035 goals, whatever they may be, that Bonneville is going to have to be the entity to do the transmission, because most entities aren't willing to, spend the money or try and do the permitting only to find out that it's a stranded resource. If you don't know where you're going to ultimately site the generation, it really is kind of the chicken and the egg. Do you site the energy generation first, or do you, plan for the transmission and worry about where it's going to be coming from second? So it's kind of the chicken and the egg on that, but a lot of people are leery about building transmission, and it looks as though the RTO is not any time in the future, near future, to meet the goals that are being set now. So just going to throw that out there.
And on that, the bylaw thing with NOAANET, wouldn't you agree though? It sounds like it's going to be a pretty significant issue, a pretty significant rewrite of the bylaws.
I guess it just depends on how it's going to affect each individual utility at the end of the day. But, you got to remember that executive board, they're there with NOAANET being the priority, not the members. So again, it's kind of it's a weird situation there. I'm sure Ken found himself in that same situation a few times, of how do you separate your own utility from NOAANET, right? So, and us being in the position we're in, moving with broadband, it really puts us in even more untenable type of position, I think. So again, we'll just have to see how those discussions go. I have my own thoughts, but at this point, I'm going to hold judgment and hold my comments about how I, would want to compromise things or make those changes until we get closer to strategic planning or to actually discussing those items at NOAANET for the bylaws.
And if I heard you correctly, you said Deborah Smith is no longer CEO of Seattle City Light.
Right.
I don't know if she gave her notice or she actually retired, but yes, she is. She's a little bit, hasn't said whether she's actually retiring or taking another position, but she is exiting, from my understanding, she's exiting Seattle City Light.
Yeah, if not already gone. I think that was announced at PPC a while back.
I think she was asked to go. That's what I heard.
I'm sorry.
I said, I'm on their customer review panel, and she said that they asked her to leave, which was surprising to me because I think she's one of the better GMs that City of Seattle's had in a long time. So
She hasn't applied for assistant manager job here, has she?
Not yet. She's a bit young to retire. I don't know. Well, be that as it.
Thank you, Ken. I appreciate that. I think I'm about the same age as she is.
So, on the 5th of May, I attended the JBAT meeting, went up to Otto Street on the 8th to sign the papers for the RUS loan to pay for that building and also broadband. On the 9th, I was at Cala Point meeting with some of the residents there and with um, several PUD staff to talk about the electric improvements that have been made. I also visited the property adjacent to Calla Point where we have a well, and there'd been a complaint from one of our customers about misuse of that property. I didn't see any signs of any recreational use of that property, tire tracks, stuff like that, or vehicles or trailers inappropriately parked on that property. So I'm not sure what it is that was bothering the customer who's called a few times about that.
Hey, Ken, on the Calla Point, is it seen that the work that we've been doing in Calla Point, has that addressed
It's
most of the
very much
issues?
appreciated, very much appreciated. When they built that, they put in underground cable, but they did a direct bury, and of
burial.
course, that's deteriorated over time, and we've been replacing that gradually, but there was uniform appreciation for the work that had been done and for the fact that we went out there to meet with them.
Good.
I got a phone call on the 10th from a few people who were lobbying for a candidate for the assistant manager position. On the 11th, participated in the PERMS executive board meeting. They're still working through the possible sale of Pacific Underwriters to a much larger company, Brown and Brown. So they gave us some detail, a bit of report of the due diligence that has taken place, but it's still very much a moving target. On the 12th, I met with the general manager, also had a conversation with our human resource manager about the candidates who have applied for the assistant manager position. There was something like 17 applications that came in, and Melanie has done a beautiful job in terms of creating a scoring matrix and culling the group down to, I think we have 5 internal candidates and a half dozen external candidates. I reviewed on the 15th, I reviewed the resumes and I think we're going to have an interesting time with the interviews and reaching a decision, but they're individuals who have very deep experience in the utility industry. I was very impressed with the quality of the resumes. So, and I will ask Melanie. Actually, I'll need to talk offline to probably Joel and Melanie as to whether it's appropriate to distribute the resumes, whether there's a confidentiality issue that we need to cover. But certainly I look forward to discussing the candidates with my fellow commissioners. Commissioner Tupper?
Yeah, you just kind of touched on it. I was curious about the process. I mean, it makes sense to me. Again, I don't want to even have the perception that one commissioner is making decisions on behalf of the board as to when we would know before I'll use the term culling or thinning or whatever we're going to do is getting that number down. I think the board as a group should hear about all of the candidates before that actually happens. I mean, that's just me. Maybe that's out of line. I don't know.
Joel, can you add any clarification there, or Kevin?
I'll add maybe not legal clarification, but the process that's put in place, Dan, once we have the viable candidates, and that will be primarily Melanie is reviewing everybody through, putting them through a scoring. And so we will, as discussed at earlier board meetings, have an executive session, but some of this really, there's over 20 candidates now, Dan. There are what we will focus on in executive session are the people we're going to interview and move forward with. So,
So one quick ask, then I don't think it would be outside of the realm of to be able to ask to see the scoring that we're using, not any names associated or candidate, but I'd like to see the scoring criteria. I'd like to see that matrix or, template or whatever you've developed for that.
sure. Easy to do. Melanie's in charge of the scoring, so.
Yeah,
Yes, I will get that sent over.
Melanie, maybe we can go through me and I'll forward it just to keep
Yeah.
it confidential.
Mr. McDaniel?
So being on the committee, we're all going to provide input into this, but just a note that the final decision, this guy's going to report or this lady's going to report to Kevin. So the final decision will be his. I think it's good to have as much input as we can get, but just a note of clarification that the bottom line here, after we've given our input, it's the main man here who's going to make the choice.
Yeah, and I appreciate Kevin letting us, take part in this process.
Yeah.
So on the 19th, I met with the general manager and also attended the no, that hasn't happened yet. I will meet on the 19th with the general manager and attend the JBAT meeting on Friday on the 25th. Another meeting with the general manager, a PERMS board meeting, and I'll also plan on attending the ICG meeting. There is a general PERMS board meeting on June 1st that I will be attending. On the 2nd, a meeting again with Kevin and another JBAT meeting. And that's my report. The next item on our agenda.
Ken?
Yeah, go ahead.
Yeah, so a quick clarification when you were talking about, so was it surrogates for candidates that reached out to you or was it actual candidates? I missed exactly what you said there.
Let's call them concerned customer owners. No candidate reached out to me. Individuals in the community who were looking for an assistant.
Recording in progress.
So again, I'm not sure, were they suggesting people or did they know who some of the candidates are? I'm just not clear on what exactly transpired there.
They were aware of one particular candidate.
That's interesting because I don't even know who any of the candidates are. So again, this is my concern with this process.
I don't think there was any breach. Clearly, the candidate who was being endorsed had shared the fact with these individuals that he'd applied for the position.
Thank you.
The next item on our agenda is approval of the consent agenda. Are there any items that need to be taken off and discussed?
No. I'll move that we approve the consent agenda.
I'll second.
Further discussion? All in favor of approval of the consent agenda, please signify by saying aye.
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 Aye. Consent agenda has been approved. We have nothing on the agenda for old business. However, we have two items under new business. The first being item 9.1, the NOAA strategic plan.
Dan, do you want to start this off or do you want me to?
Sure, yeah. And it was an open session. It was a call out basically for the members. They want us to respond. They've been knowing that by the end of the week about items that we want or are concerned with as far as strategic planning to go into the strategic plan. And I alluded to earlier, there was an email came out yesterday or today from Rich Knoll, and he's looking for times and the only thing I saw in the poll today, which I didn't fill out yet because I wanted to run it past the board in case we all want to be involved with that meeting, is the 29th of June. And I think there was a morning time 2-hour slot and an afternoon 2-hour slot. Right now, that's what they're working on. I think that's the first blush at it. It's by no means, going to be something that is going to be a one and done. I think it's going to be a process. So that's what that little matrix that came out was. Couple of clarifications. Marco plan is a marketing and communications. That's a reference to marketing and communications, if you read that. And then OPEX is operating expenses growth. That's as they expand what they, how they want to deal with the expenses and the operating costs moving forward. So just a little bit of lingo there that was in that. That's what that was referring to. So with that, again, I'm just throwing it out there. I will obviously try and schedule that in to, take part in that. But I was just curious of what if the board had any issues or any concerns or preferences as to how they want to see NOAANET position themselves moving forward or stay on the path they're on or anything like that. So it's kind of a 30,000-foot question at the moment.
Yeah, my recollection of when they brought this up, they were basically asking, did we cover the bases? Are these the issues necessary and adequate for a strategic plan? And I can't remember if it was a consultant who was there speaking about this or who it was that presented it. That was the question.
So it's an open question to the board. Is there any, after seeing that matrix, is there anything that we, want to go into that? I don't know if you gentlemen want to be a part of that meeting or not. I plan on being involved with that. So again, I just getting your feedback as to if there's anything, that jumps out at you guys, or if that's a starting point, if they're okay with what they've got there, so that we can let Craig know that we don't have anything to give him here by the end of the week as far as direction on that meeting and strategic planning.
I don't have anything additional, and I'd love to tune in and just listen, because for me, it's really helpful just to hear these different discussions that are occurring, because at the NOAANET meetings, like I've got questions here. I want to follow up with Benton PUD because they clearly have a relationship with NOAANET where they feel like it's mutually beneficial and that Benton feels like they're making money. And I'm feeling like, okay, what's their relationship? And then to kind of reflect on what our relationship and experience has been. But I think it'll be great just to hear them say, here's who we think NOAANET is, here's where we think NOAANET is going forward, because I'm still in a lot of flux understanding our relationship with them. So I think it'll be very valuable discussion.
So I don't have anything to add. I do find it interesting that they took credit for the BTOP grant.
Well, and they announced at this last board meeting, there was a bunch of utilities in NOAANET, which NOAANET handled the grant applications for, that they were successful in getting money. But yeah, to say that it's NOAANET's money, it's odd.
Yeah, I find it very odd, and I'll just leave it there. The next item under new business 9.2 is a new transformer purchase. Mr. Street.
Yeah, I'll jump in and we'll talk. This is a new specification for a substation transformer in Quilcene. Quilcene's transformer is the smallest transformer we have, and it kind of limits the capability we have with backfeeding from Quilcene towards Chimicum. Primarily what we do is feed from Chimicum to Quilcene area. This is a little different transformer than we have purchased in the past. As the board knows, we have purchased 2 transformers. I'm not going to jump in the weeds, but electrically we've made some changes. We believe the changes are better for us. We have reached out to BPA to make sure what we're going out to purchase will work on their system. So in a nutshell, this is just to inform the board. We have a new specification. We hope to be able to finalize everything in the document by the end of this week, first of next week. And then it would be sent out as a RFP for getting quotes.
So I have a question.
Go ahead.
So that was thanks for the background. So it sounds like this one hasn't failed or is failing, but I zoomed in on the date and I saw the data manufacturer was 1969. So gotten a good 50 plus years out of this thing. So it sounds like you're looking at it, it's older, it's small, and the future system that you'd like to operate requires a different substation transformer that will work better so that our substations can serve each other better and backfeed better and so forth. Is this piece of equipment going to be usable by the PUD in any shape or form once it's retired? Is it going to be able to be any sort of backup thing, or is this pretty much once it's replaced, it'll be out of the system?
This is, Commissioner, the only transformer that's really too small for us to keep it as a spare. We may look at something, but before we could even classify it as a spare, we would have to ship it off, have it worked through, gone over, had the oil processed. The bushings on this particular transformer are of a make that has caused problems in the past. We'd have to change out the bushing. So as of today, with today's cost, we don't think we will utilize it, but we're not sure. 2 years from now, we'll reevaluate to see if this is worth sending off.
And I saw that the date on there you had for the bid, you had a date in 2024, but you also gave the manufacturers the ability to propose a different date if they couldn't perform by then.
We are getting some really long lead times. With this specification, our transformers are a little bit different than norms. So 4 months ago, a similar transformer was quoted at 2 years. We hope to get it prior to that, but we're not sure.
Commissioner Tupper.
Yeah, I saw the same clause Jeff talked about. I hope we would never have to exercise that, because that means we wasted a lot of time and then we're going to wait a lot longer to get what it is if we have to change horses. So let's hope we never have to utilize that particular clause. So my question, couple questions, Kevin, is, so then would you surplus this out, or would you just go ahead and send it off and see what it was worth? Again, I know you'll have to maybe get a better idea once you go to kind of decommission it, but because interchangeability, right? Obviously, this one is too small. You've said that. Maybe Mason or someone else could utilize it in their systems, or I don't know, right? That's your thing. So interchangeability as we start to buy these transformers is important. I'm assuming we're looking at that. Program wide is what we're going to do, and maybe you could touch base again on this. We had the one at Ludlow, we have, that's in the works, and we have this one now. What is the actual plan and the timelines for your change out, replacements, augmentation, whatever you're going to do in the different substations? How long of a plan is you looking at this? And are you expecting the funding to come from grants or loans or revenue finance to an extent through budget? Again, give us an idea of the whole, term of how you're going to play this out.
Okay. And this is a ever shifting process. This transformer would be purchased specifically for Quilcene substation. As of today, the transformer at Quilcene would be retired. So yes, we would surplus it. This is the third transformer the PUD has purchased in the last 10 years. Wow. What will happen, Colton's group by June 12th will have the transformer taken apart to the point that it can be shipped off that failed in Port Ludlow. That will be rebuilt. We believe when that comes back, unless we have another problem, that will be put into Port Ludlow substation, and that substation will become a dual bay. The transformer specifically would feed the 2 new feeders coming out of Port Ludlow substation to the Breaker Lane area, but we would go cross country, not down along the road. During winter, our peak load in the Port Ludlow area exceeds not only the capacity of the design of the wires getting there, we're fast approaching the capacity of the transformer. You know, we have a couple years left on the transformer, but if we put a double bay in there, that gives us some backfeed under peak situations to Chimicum. So we do have a pretty detailed out plan on how this will work, but the 2 transformers we have now, the rebuild back in Port Ludlow, the new transformer at Quilcene, and then the staff will come back to the board and recommend purchasing another one. And for now, we are looking at grants and other opportunities, but these will be they have to be purchased. So the only guarantee we have for revenue is rates. So we hope to get some funding, but if we don't, they would have to be purchased with rates.
So Kevin, maybe I'm gonna stretch you a little further here is, Kearney and Hastings, again, I'm kind of looking by district, right? My district's, getting a lot of stuff thrown towards its direction, but you look at the other districts, Chimicum and Four Corners, I would argue that we're probably in decent shape there. When you look at Kearney and Hastings, I don't want it to look like we're, neglecting other places. Discovery Bay is another one. We have a lot of substations. What's your overall plan? We can kind of let the public know how we're proceeding and why. Maybe you can give a little flavor. I know it's a moving target, but maybe you could give a little flavor to that and ease people's minds that nobody's being forgotten or overlooked.
So as a PUD, we try not to ever overlook anyone, but our monies only go so far. So we do, at least on transformer purchases, purchase them where it is the most advantageous for the PUD. For Dana Roberts substation, for example, the substation crew this summer will be changing out regulators in the substation, and they'll be putting in a new battery backup system specifically for the breakers and the relays. So we have that scheduled and the material already for that work to be happening this summer. We hope in 2024 to change out the regulator at Hastings and change out some jumpers in late summer, early springtime. So we do have an ambitious substation infrastructure program. We're looking at things, but these are expensive projects. For example, the substation transformer we're looking at going out to RFP for, we believe will be around 700 to 800,000. It could go as high as $1 million, depending on, the cost of core steel and copper. So we're being aggressive, but we do as much as we can with the cash available.
Thank you. I think for transparency, and this could be rate impacts coming too. So I just want, I want to make sure everybody's aware of what we're doing. Thank you.
Kevin, do you think you could provide us with a timeline on the improvements to the substations, including replacement of transformers? Not necessarily by the next meeting, but when you're able to do that within the next month or so.
So for everyone here, a lot of what we're talking about, we have to have our new 4-year work plan for RUS completed by the end of the year. I met with ICPE, they're our engineer on call on Monday. We reviewed some of these projects. So right now, we're trying to juggle a lot of things and put dates in as best we can for the 4-year work plan. So if possible, could we wait till maybe early fall and then have a workshop where we present and talk about some of these key projects and why we pushed them one way or another, Ken? Because that's the hard part. It's not only these projects we're trying to get done in the next 4 years, but it's multiple other projects at the same time that we're trying to shoehorn in with dates.
I'm fine with that. Commissioner Tupper,
Yeah, I would say because we're going to be into the 2024 budget cycle, but at the beginning of August, more than likely, this is information that would be germane to looking at, next year's budget. So again, I'm not trying to push you, Kevin, into any sooner. We'll go with early fall.
I will throw this out there. Technically, I'm on vacation meeting with ICPE. It just makes for, sometimes my wife isn't as forgiving as she should be. So we have a lot to do. We have a lot going on. All of the directors, all of staff wearing multiple hats, and they all spend a lot of time working on these projects. So
I
the
think,
time helps us.
I think we can appreciate that there are various demands on a general manager. So you're not looking for anything,
They're looking for a motion.
are you looking
No.
for? No.
No. So how I see this moving forward is we are going to send out an RFP. If we get when we get quotes back, then we will bring it back to the board and say, okay, board, we are recommending this vendor at this price for these details. I know I read in there this morning that I don't need a motion to proceed with the bid. I just need you all to know the next step will be approval of a purchase if we get the right cost and time frame back.
Very good. Well, we have concluded our business for this evening. And unless somebody has a pressing issue or comment that they need to make now, I will declare our meeting adjourned and thank you all for your participation.
Thanks, commissioners. Have a good evening.
Thanks, everybody. Have a good night.
Thanks, everyone.
Goodbye, everybody.
Bye, Cammie.